Short term, I think the dollar falls a bit further, might even get down to 95, the DXY. So that's the unwind, the A, it's where it goes back again. But structurally, the dollar's in an uptrend, and it's driven in an uptrend because 85% of world trade is in dollars, 400% of GDP in debt is dollar-denominated debt. So we've got a structural shortage of dollars, and that shortage of dollars, either in times of crisis or times of boom, tends to drive the dollar higher. So still remain a dollar bull.
Former Goldman Sachs executive and Real Vision co-founder Raoul Powell has high hopes for two asset classes in 2023 and beyond. The world's largest altcoin, the US dollar, seems to be on the cusp of yet another upward bounce, and a prominent Ether investor and advocate is placing enormous bets on it. The US jobs market statistics showed that there might not be any interest rate reductions for the remainder of the year, which caused a decline in global equity markets on Monday relative to the dollar. The Federal Reserve has signaled that interest rates could increase to 5% or perhaps higher, and remain there through 2024, contrary to the generally held perceptions in the markets. He expects rate cuts to happen later this year once the economy slows down, but the market has already factored them in. Powell thinks cryptocurrency offers a reasonable diversion from the chaos and concerns, because there is so much unpredictability in the markets and economy.
Do you believe there's a chance that the debt bubble would eventually burst? Obviously, we've all thought a lot about this topic, and I've been writing a lot in Global Macro Investor about this, and I think the answer is it cannot burst. They can't allow it to, because it's too catastrophic. But B, quantitative easing means that they'll never burst. So the government can just endlessly finance itself, print more money, and they can endlessly print more money to make sure that the value of assets, the collateral of the system, goes up, and therefore nobody's insolvent. We saw that in 2020, and I think that was the big signal for me, is they can't allow the insolvency. Remember, I had that insolvency phase idea? Well, that never happened. And what stopped it is the Fed came in and said, no, sorry, your collateral's not going to go to zero. And so don't forget, we've got this massive pension system, and the liabilities there are a huge problem as well. So they just can't allow it to happen. So I do not think the debt system bursts. I think it dies in different ways. I actually think it dies from, over time, I think they have to get GDP growth above debt growth. And that's going to take time. I think it's going to take a change in the demographic, i.e. the dying off of the baby boomer population. And then GDP growth driven by technology, and productivity growth has to go up. So it's actually a long-term game, and I think they'll hang it out for as long as possible, much like Japan has been doing and Europe's been doing. I think it's a long-term game, and what we get is the debasement of assets to counteract it, debasement of currency, which leads to higher asset prices and everybody getting more and more angry because the markets never go down. So I actually think that is how the world works now. And I know people don't want to believe it, and everyone just wants, see, they blew up the system. I think you're going to blow up yourself if you try and fight that game. I think we just proved it again. Yeah, nice shirt, by the way. It's the Irresponsibly Wrong shirt. Dusted out the wardrobe just for you guys. I thought, I want to make a statement. And I am all in still in crypto, so about that. What about the dollar? Good question. Seen a few of those wing by, just great. Short and long term. Short term, I think the dollar falls a bit further, might even get down to 95, the DXY. So that's the unwind, the A, it's where it goes back again. But structurally, the dollar's in an uptrend, and it's driven in an uptrend because 85% of world trade is in dollars, 400% of GDP in debt is dollar-denominated debt. So we've got a structural shortage of dollars, and that shortage of dollars, either in times of crisis or times of boom, tends to drive the dollar higher. So still remain a dollar bull. And I was living in Spain in 2012, and we just had the massive financial crisis in Europe. We almost lost our banking system, had to buy a generator and tin food, crazy shit. Terrifying when you lose your banking system. And Cyprus lost its, obviously completely, and Naples' savings are wiped out. So it was a mess. You had to take cash, put it out of home, try and find gold, all of this shit. Luckily, the money printer stopped the collapse. Right, big lesson to be learned there. I didn't really still believe that to be the case, which I now do. But at that period of time, the euro was trading about 148.5, 148 against the dollar. And I was living in Spain, and I had euro savings, and my business, Global Macro Investor, was billing in euros. And I took the ridiculously brave bet, kind of like this crypto bet. I went, yeah, it's actually just like this crypto bet. I just went, fuck it, I'm all in on the dollar because this is the wrong price. And Europe's got a structural problem here. And so I switched all of my life savings into, yeah, it's exactly the same as the crypto, just has less bang for your buck than the crypto does. So I switched 100% of my life savings into dollars. I then went and bought, then changed the billing for Global Macro Investor into dollars. And then I went and bought a property, 2 properties, one in Cayman Islands and one in Miami, because that would stop me trading out of my position, which is what I've done with crypto. Like I started this exponential age fund of hedge funds. So you get locked up for 3 years and stuff like that, ways that you don't outguess yourself, because you'll get these 2-3 year rallies and then it falls away. And we saw huge moves up and down, but that bet's been the gift that keeps on giving. And it also reminded me, another nice story about that trade is I was thinking through this mechanism of asset allocation in that kind of very big global macro terms, right? I want dollars. How do I hold dollars? Well, I can buy bonds, I can buy equities, I could buy assets, real estate, art, stuff like that, stuff priced in dollars. So what you're doing is you put it in dollars, you're now in that currency, and your base currency is that. So then if you buy real estate on top, and real estate goes up 50%, so you get the dollar appreciation plus the 50% or multiplied by the 50%. So it gives you super leverage on your dollar position, but you're still in your dollar trade. And I hadn't really figured this out properly, what it actually means. Now, I could have chosen stocks, but I didn't want to take that risk. And I did have some bonds at various points. And so I would take the interest on that. Bonds went up and the dollar went up. So I made a really decent return from doing all of this trade. And recently I realized that this is the same trade I'm doing in crypto. So if you look over there, you see my NFT, there's my Bored Ape and Punk and all that stuff. They sit on ETH. So you make an allocation to ETH, that's the economy I want to allocate to. And in that economy, I try and buy a fixed asset, because fixed assets are scarce and they tend to do well when things are booming. So you buy a fixed asset, which is a rare NFT, or a community asset, which is something different, but an asset, or maybe like an equity, whatever. And that, if that does well as well, it gives you the return over ETH. So if ETH goes up 10x and they go up 3x, you make 30x returns. Yeah, you don't think about this, do you? It's a free call option. Real estate is essentially a free call option on a foreign bet. So NFTs are a free call option. Free meaning because some dickhead on Twitter or here is going to go, hey, you said they were free and they've gone down in price and I've lost money. What I mean by free call options is what you're really getting is convexity of returns with less risk. No, but generally speaking, you buy good assets, their volatility is less. So that Bored Ape has been stuck at well, not this particular one, but the floor price has been stuck at 65 ETH for a year and a half. So it's pretty stable. So what's the downside? Well, in the panic in June, they went down maybe to 55 or something. So the downside's about 55. What's the upside? Well, it's been as high as 3x this. These are great call options to own, and I still have my ETH bet. So
how do you feel about Raoul Powell's recommended investments for 2023 and beyond? Given the state of the world's markets and economy now, which asset classes do you prefer? In the comments area below, kindly share your thoughts with us. In order to ensure that you never miss one of our regular uploads, make sure you like this video, subscribe to the channel, and enable post alerts.